Welcome back to the programme. We're going to go straight into a caller. We've got Teresa from Tasmania. Welcome to the programme, Teresa.
Hi, I'm just wanting to know if you could just tell me, we have some stocks in PRR, which is the Prima Biomed. Wondering if you can just tell me how you think they're going to go.
Okay, so this is another business that at the moment, as far as I can tell, doesn't appear to be making money. For me, unfortunately, I can't come up with a valuation that's positive. It's not even I get some A1 businesses that have strong balance sheets that aren't earning money, but this business is ranked as a C3, which for me means it's not even investment grade. So while I note that the share price has gone from 1 cent back in 2009 to in excess of 40 cents or around 40 cents earlier this year, for me it's just not something I can participate in.
Yeah, well, it makes a drug called CVAC. It's been actually, I think there's a lot of people who got very, very excited about this company, and some of the I've spent a huge amount of time. I think this is one that definitely warrants a bit of investigation.
So what do you hope that investigation produces?
What do I hope it produces?
Revenue and profits is my expectation.
I mean, that's all right. I mean, it's a very speculative company. It's one of those ones that can make you, a huge amount of money. But I mean, This is one that if I was going to buy into it, I'd certainly look at the risks. I'd do my due diligence. What's the commercialisation here?
Yes.
I think one of the things that I've read about Prima has been about its peers. There's been I can't remember the name of the company. I think there's a US manufacturer who makes a similar drug, and that's the market cap of that company has just been skyrocketing. So I think people are hoping the same sort of thematics will play through.
Can I just make one observation just at an aggregate level? I've just made some comments in our annual letter about the fund. Australia has spent a great deal of money on research and development. The big money in pharmaceuticals obviously is taking them to market, ideally to the United States, the biggest market in the world. Invariably two things happen. One, you spend billions of dollars on R&D, and we have a woeful number of drugs that are actually waiting at late stage clinical trials. And then inevitably what happens in Australia, and it's very disappointing of course, is that prior to any serious money being made, an overseas suitor comes along and actually makes a bid for the company and takes all the profit away. And so Australian shareholders end up funding the risky part. Hopefully they get some return, but they take all the risk and they don't seem to get all of the returns. And it just disappoints me on an aggregate level. So I hear what you're saying, and I do hope that for investors in this particular company that they do end up with something commercial and something that makes a lot of money, but the track record's not so great.
We're going to go for a quick email. We've got an email from Luke. I'd like to ask the expert panel about Decmil. I'm looking at buying on a long-term hold. Could you please give me the fundamental view on the stock? And the share price has dropped recently. Is this now a good buying at these levels? And he's also asked, what's your intrinsic value? So I guess, Roger, you're the man with the intrinsic value. So do you know that the ticker code on the stock's DCG?
Yep. I know the company very well.
Good stuff.
There's been some chatter about a slowdown in mid-tier projects. This is a resource contracting company. There's some talk that's slowing down, but this is a company that has very big clients. We're talking about Rio, BHP. NRW Holdings has won something like $1 billion or more than $1 billion worth of contracts. They're an early stage contractor. Companies like Decmil come in after them, so we think the prospects for this business are very, very good. It's an A2, not an A1, but a very high quality business, and we also think that it's at a discount to its intrinsic value. So we're currently investigating this. We didn't own it when it rallied all the way up to $3.70 or thereabouts. It's since pulled back by more than $1.20, and it's now looking like it's a discount to intrinsic value for us. We want to be satisfied that its prospects remain bright and that its ROE is going to stay very high, and if that's the case, we think this is a very high quality business.
Well, what sort of stocks would you be looking at in the industrial? Then I'll probably come to you on a technical basis. I mean, you're looking at your Monodelphus, your Worley Parsons. Is there anything now?
I think Monodelphus okay. Worley Parsons seems a little bit expensive. The company that we're interested in, Decmil, obviously, and just on the industrials, the industrial index, the all industrials accumulation index, from its April highs, it's down more than 11%, or it has been down more than 11%. So you're right, it has underperformed, and we like that. You know, we've got 80% cash at the moment, so in our fund, and so we're delighted to see lower prices. As net buyers, and I think investors forget this, as net buyers, you want lower prices if you're anticipating making purchases, not higher prices. So mining services is an area that we're very interested in. Matrix Composites and Engineering is a business that we like. Decmil, we think some of the telecommunications companies, the smaller telecommunications companies, are interesting as well. There's a few, and I'm sure over the course of the program today we'll highlight some of those. You know, the retailing sector, you know, is really getting a hammering. You know, it's a perfect storm for retail stocks. Investors think, you know, there's a sentiment that seems to be pervasive at the moment that retailing in Australia is dead and everyone's going to move online. Well, the United States is way ahead of us in terms of the online migration, and retail over there isn't dead. You just have to have the right offer and the right product. So I think there may be some opportunities there as well. Flight Centre is another company. You know, outbound travel in Australia with the strong Australian dollar. If you believe Jim Rogers and the Aussie dollar is going to $1.40, then that outbound travel is only going to increase. And Flight Centre is another high quality business that appears to be cheap.
Yeah, thanks, Chris. Chris, I have a technical question for Michael about Fleetwood. Code is FWD. If you look at the monthly chart, I stress that word monthly. It seems to be, Michael, there seems to be a number of peaks. I've counted 4 of them from June. Do you think the stock would have a 5th peak and go higher? It was slightly higher today. Thanks.
You like to get in your caravan and plod around Australia, so...
I don't own a caravan. I'm not sure where you got that from, Chris. Mind you, I think it's a wonderful way to see the country. You know, I think it's fantastic. I know this company reasonably well. I've owned it twice in the last 10 years. The last time I purchased it was personally during the global financial crisis at about $3.50 to $4. And my office and my team in my office sold it more recently at $13 to $14, and it's since pulled back. What do I know about this particular company? Well, obviously Woodside renewed their agreement for 500 rooms in June. That's fewer rooms and possibly at a lower price than what the market was actually anticipating. But what's interesting about that is that you've got the first train of Woodside's Pluto 1 winding down. Now, when Pluto 2 starts, then what you'll actually find is a lift in accommodation needs. Rio Tinto's also taken some more rooms. So that's the traditional analysis of the company. You know, the prospects for this company appear to be good. Demographics, you know, baby boomers retiring and travelling around Australia, that might be good, although I must confess I think there's some competition from a high Australian dollar for people travelling overseas. But my analysis of the upshot of everything that I've just said is that we think the intrinsic value of this company is about $10.28 in 2013. So what do I think that this company is actually worth? Well, that's the value, and it's still a little bit expensive compared to that value. And I don't think that value is going to change much in the next 2 years. So as I say, I've owned this company twice. I've bought it at very big discounts to intrinsic value and sold it at premiums. I now think it's still at a slight premium. That intrinsic value isn't moving much in the next 2 years.
Wonderful. Montgomery from RogerMontgomery.com. And to you, all our viewers, for all your emails and calls tonight. Until next time, I'm Chris Weston.
The information featured in this program is general in nature and therefore should not be relied upon. Guests appearing on the program may have commercial arrangements with some of the companies mentioned. Before making any investment, insurance or financial planning decisions, you should consult a licensed professional who can advise whether your decision is appropriate for you.